Congratulations on the purchase of your home. Whether you've owned your home for 6 months or 2 years, we're glad to have you as a customer. VHDA is dedicated to working with you to ensure your success as a homeowner. This video will give you a better understanding of the refinancing process so you can determine if it's the right option for you. The information presented in this video is specific to VHDA mortgages and focuses on refinancing through VHDA. For information about refinancing a non-VHDA mortgage, contact your mortgage lender. In order to determine if refinancing is right for you, you'll first need to know what it is and what it is not. To refinance your original VHDA mortgage through VHDA means to work with an approved VHDA originating lender to pay off your original mortgage and receive a brand new mortgage. Like the steps you took to obtain your original mortgage, there are costs associated to refinance your mortgage. When your original VHDA mortgage is refinanced to a new VHDA mortgage, it will include brand new terms. This includes, but is not limited to, the loan term, the monthly payment amount, and the interest rate. However, refinancing through VHDA does not include any cash-out options or home equity lines of credit. For example, Maxie worked with an approved VHDA originating lender to refinance her original VHDA mortgage. She'd like to try and get a lower monthly mortgage payment, so she decided refinancing was the best option for her. When all of the paperwork is approved, she'll have paid off her original VHDA mortgage and received a new VHDA mortgage, which includes the lower monthly payment she was hoping for. It's important to understand that refinancing is different from a loan modification. A loan modification through VHDA is only offered as an alternative to foreclosure for VHDA customers who are experiencing a hardship. A VHDA loss mitigation officer will verify you meet certain eligibility criteria to qualify for a loan modification. Then, they will change the terms of your original VHDA mortgage without requiring you to refinance to a new mortgage. For example, Robert has fallen behind on his monthly mortgage payments. He completed and submitted VHDA's Borrower Assistance Package in order to avoid foreclosure on his home. Then, he worked with a VHDA loss mitigation officer who verified his eligibility for a modification to his original mortgage. When his modification goes into effect, he may have new mortgage terms which will help him make his monthly payment on time. Eligible VHDA mortgages are refinanced one of two ways through VHDA, the traditional method or the streamlined method. The type of VHDA loan product used for your original mortgage determines the refinancing method. The traditional method of refinancing requires you to meet certain eligibility requirements, including, but not limited to, a minimum credit score, income limits, a maximum loan amount limit, and having your home appraised. Your originating lender will review all the eligibility requirements with you. VHDA's exclusive Fannie Mae HFA loans with no or reduced mortgage insurance, or MI, are refinanced through the traditional method. Additionally, non-Fannie Mae loans, such as FHA or rural development, may be refinanced into a Fannie Mae loan through this method. But again, in order to refinance your mortgage, you'll still need to meet certain eligibility requirements. Traditional refinancing of your original mortgage could help customers whose VHDA loan has a high loan-to-value, or LTV, or those who want no or reduced MI. Additionally, in certain circumstances, your second mortgage may also be eligible for refinancing along with your original loan. On the other hand, the streamlined method of refinancing is a non-credit qualifying transaction and therefore has different requirements than the traditional method. Additionally, you must have made on-time payments and your mortgage must be current. For example, the streamlined method doesn't require you to have a minimum credit score, but it does require a minimum age of your mortgage. This is also known as seasoning. Your originating lender will review all the eligibility requirements with you. You can refinance a VHDA FHA loan through the FHA Streamline Refinance or a VHDA VA loan through the VA Interest Rate Reduction Refinance Loan, or IRRL, using this method. Streamlined refinancing could help customers who want to refinance to the same loan type, and it has the added benefit of not requiring a home appraisal, which will reduce the costs. As part of the refinancing process, it's important to identify the VHDA loan product used for your current mortgage. You can find out by logging into VHDA's secure portal, Customer CareNet, at vhda.customercarenet.com. After logging in, click My Loan, and then click Loan Details. The General Loan Information tab will display your loan type and other important information. After identifying the VHDA loan product used for your mortgage, the next step is to find an approved VHDA originating lender. They will help you understand the eligibility requirements for refinancing, determine if you qualify, and facilitate the paperwork to get the refinancing application approved. To find an approved VHDA originating lender in your area, visit vhda.com/find-a-lender and use the search tool. Once you've identified an approved VHDA originating lender to work with, you'll want to discuss the refinancing process and your options with them. Remember, it's important to decide if refinancing is the best decision for you before agreeing to anything. Here are some important questions you'll want to ask your lender.
What happens to my mortgage credit certificate, or MCC?
If you refinance your original VHDA mortgage, you are not able to use your MCC any longer.
I have a second mortgage. Do I have to pay it off if I refinance my first mortgage?
It depends. The second mortgage could be paid off, it could be included in the refinanced mortgage, or it could remain as is. Be sure to discuss your second mortgage with your approved VHDA originating lender.
Will the terms of my original mortgage change once it's refinanced into a new mortgage?
Typically, the terms of your original mortgage will be replaced by the terms of your new refinanced mortgage. Like your original mortgage, your refinanced mortgage may include compliance requirements, such as paying mortgage insurance and owning and occupying the home.
I've been making payments towards my original mortgage for almost 10 years of the 30-year term. Does that mean my refinanced mortgage will be for a 20-year term?
Generally, you'll receive a new term, or life of the loan, when you close on your new refinanced mortgage. The term of your refinanced mortgage is typically 30 years. However, after refinancing, the term may vary depending on the type of VHDA loan product originally used.
When I refinance my mortgage, can I also add someone to it or remove someone from it?
It will vary depending on the type of VHDA loan product used and the reason for adding or removing a person from the loan. Discuss your situation with your originating lender so they can advise you of your options.
Are there costs involved in order to refinance my original VHDA mortgage?
Typically, homeowners encounter many of the same closing costs to refinance their original mortgage as they did when they bought their home. Refinancing your loan could cost thousands of dollars, and those costs would need to be weighed against any benefits you would get from refinancing. Talk to your lender about your options and how lender credits could help offset some of those costs.
I constantly get offers in the mail to refinance my VHDA mortgage. Some of these appear to be from VHDA. How can I tell if these are legitimate offers and whether they are right for me?
VHDA doesn't mail refinancing offers to customers. Be sure to review all offers you received with your approved VHDA originating lender. Also, you can compare the reduced interest rate offered with the interest rate of your original mortgage. You can locate your interest rate by logging into vhda.customercarenet.com.
Should I refinance if I know I want to sell the home within the next few years?
You should discuss your reasons for wanting to refinance and your future plans, like selling the home, with your approved VHDA originating lender. They can help you determine if now is the best time for you to refinance. Due to the typical costs involved with refinancing, most homeowners choose to include these costs in their refinance mortgage, which results in a higher loan balance. The higher balance may eat into the equity that has built up in the home, which may impact a sale in the near future. The decision to refinance your VHDA mortgage is a big one, and it should not be entered into lightly. Make sure you discuss all refinancing terms and conditions with your approved VHDA originating lender. Most importantly, be sure you've considered how refinancing will impact you before you decide if it's the right option for you. To access frequently asked questions, visit vhda.com/homeowners. To view information about your VHDA mortgage, visit vhda.customercarenet.com.